If the market's recent pullback has you wondering whether it's time to sell your ASX growth stocks, you're not alone. But before you hit that sell button, you need to see what we've uncovered. Tonight, our experts with decades of market experience are regularly called upon by major Australian media and have guided investors through volatile periods just like this one. And tonight we have scoured through the entire ASX to identify the 10 growth stocks still showing real strength. So if you're questioning what to keep, what still has potential, and which growth stock names might actually be setting up for the next move, stay with us. This episode could change how you navigate the pullback. I'm Janine Cox, joined by analyst Philip Tortevsky and Pedro Beniales, and we are Wealth Within. Good evening.
Good evening.
Good evening, gentlemen.
Guys.
Great to have you on the panel and change of seats, but tonight's topic, growth. It's so exciting. I'm really looking forward to that.
Yeah, and I mean, what a better time right now. The growth stocks are coming off and there is all this talk right now. Do you buy? Do you sell? What do you do? But we're going to answer all that.
Got some secrets there. And you too,
hope
Pedro.
we can be the glimmer of hope in people's lives with all the doom and gloom in the news these days.
I'm looking forward to that hot stock tip tonight. It's a
That's
good one.
right. I bet you it'll be skivvy for sure.
All right, let's get straight into it. A lot of good growth stocks on the ASX have fallen over the last couple of weeks, and stocks that were showing amazing potential, and now the price action might be telling a different story. So if you're an investor with growth stocks in your portfolio, what do you do right now? Phil and Pedro, you've got all the answers for us.
Yeah, what do you do? No, I mean, look, it all comes down to, for me, first and foremost, what type of portfolio we're talking about right now. There'd be the people in there that are sitting with superannuation portfolios, so this advice would be for them, but then there are also traders that are, holding for different reasons. But when we're talking about growth stocks in particular, I think zooming out bigger picture and identifying or breaking down, is this pullback a pullback or the start of something bigger? That is the big thing to consider, and do that with each of your stocks individually. A lot of people are looking at the pullback from a big picture point of view, looking at all the news, all the fundamentals, trying to add things up, but you're trading stocks at the end of the day.
Exactly.
What's your stock telling you? What are the levels it's at? And identifying that, which we're going to cover off on the Stocks We Show. But yeah, for me, it's individual stocks analysis, first and foremost, and really answer that question, are you in a pullback or is it the start of something worse?
Right, I'm looking forward to that, Pedro.
Yeah, it's such an important question because I think selling is one of the hardest things to do in trading. I mean, it's easy to push that buy button, but a lot of people, especially the ones that come to us, I only spoke to a student the other day, and their main concern was selling. They had stocks in their portfolio, they've been active in the market, but they want to know when to sell, when they're in profit, when they're in loss. So this is exactly what we want to address here is, do you sell when it comes 10% off the top? There's so many different, strategies out there. But really it comes down to the strategy that you've tested on that particular stock. And like Phil said, look at that bigger picture, because that's going to tell you really, is this just a little bit of a pullback on the overall move, or is it something more serious?
And there's potentially some big money to be made with this next move, isn't there?
Yeah, I mean, when you look at the nature of the market at the moment, we've been talking about this off air, it's, how are we going up? That's the big thing in terms of what's happening right now. And I think over the last couple of months, especially mid to late 2025, we've seen a bit of a shift in the volatility to the upside, a way more bullish in terms of how we've been moving in the past. So I think right now, this month, this pullback will explain a lot in terms of whether we move into that supercharged bull run next or not. And
yeah,
this pullback's the key.
Absolutely. So stay tuned and we'll give you more of that. All right, let's dive into the first lot of Australia's best growth stocks to see if it is indeed time to sell or buy more. Now, timing is everything, Phil.
Yeah.
I mean, we teach that in our course. Some people know price, but they don't know anything else. But there are 3 components to what they need to know. Is it time to sell?
Yeah, all right, let's go. Metcash is the first stock, and I mean, you're totally right. You could be the best fundamental analyst, the best economist, the best macro trader. If you get your timing on buying and selling wrong, it all means nothing, right?
Right.
And that's why we place timing number 1 on the list. It's why we teach it, why we're experts at it, and it is crucial. If all you are good at it is that, you've alleviated a lot of issues when it comes to making a profit from the market. But anyway, looking at Metcash now, what I like about this stock here is and I want to, I guess, preface this by saying for any healthy trend to unfold, there needs to be, buying and selling. It can't just be one way, because that starts to, print itself in the form of real euphoria in the market. And I mean, what we've seen over these last couple of months in May, that to me was some really, really strong buying and a clue in terms of what we should expect next. Because if we were to pull back and take all this buying out through here, well, that's an indication that is some kind of euphoric type speculation. But given we've come off really healthy buying, really healthy selling, we're getting those ebbs and flows that you would see in a healthy trend. Right now, we've already recovered what the pullback was during October. And unlike a lot of the rest of the market, which has been falling in November, Metcash has actually been up. So from a big picture point of view, I like the fact that it's unfolding this way. It still looks bullish long term. I think if we just apply a level through here, that would really give us a nice marker to say, okay, if we hold above that 359, 350 level, then I would consider this stock to be healthy and on its way up. On that weekly chart, I would like to see what happens next year, because we've had 5 or 6 weeks up. We've had no selling to test it. Mind you, we're coming off this quite strong pullback. So it's not going to be uncommon for me to see Metcash go for another dip down. It's just how strong that dip is. And if it holds on this, above this horizontal level through here, and also the momentum on the way up, I think that's going to, like you were alluding to earlier, set it up for potentially that next medium-term leg up, which a lot of these stocks might be doing, which is where the opportunity.
Yeah, I mean, so many people, they look for a stock once it's actually fallen and are thinking, right, and the brokers put out reports, don't they, saying the stock's now cheaper, it's an opportunity, and at the same time those people don't realise that they're trying to flog the stock off or move it for somebody else, which is pretty sad. But you have to have that awareness and really understand what's going on, which is why you need to be able to read the direction of the chart yourself. Even if you're investing with a broker, be able to cross-check what they're saying. So the next one we've got is TLX, really interesting one.
Yeah, it is. I mean, TLX has been on an absolute tear all through 2024, but unfortunately it hasn't been very loved now in 2025. But you can see here on the monthly chart that it's come back to the angle of this trend now. So that's looking quite interesting. Now, I mean, we're talking about selling and selling at this current time. There isn't an exit rule at this current time, but there was up here back in 2025, back in May 2025. So, anybody that would have known technical analysis, or maybe has gone through our course, would have gotten out with a nice healthy profit up the top here, and would have actually evaded that whole move down. And we're talking a big chunky move down of 40%. So, you would be kind of thinking, all right, well, if you did get into the stock in a good time and now you're 40%, that's cut off your profit, you'd be a little bit hurt in that way.
Definitely.
Not only that, it proves the point, if we go back to that chart, of why when we say, stocks that move in certain ways, it's always so repeatable. And the importance of being able to look at that chart is, when you look at that run, like Pedro mentioned, all the way up, if I had to guess, and there would be so many traders or investors looking at this all the way through up, with all the good news coming out saying, I'm going to buy this and I'm going to hold it forever, or it's a great stock, not expecting that it could ever do something like this.
Yeah.
And then when it falls down this way, they've forgotten about it, they've thrown it out of their watch list, and they're thinking, oh, it's a crap stock, it's done. But no,
exactly.
When you understand price, when you understand the things we teach you, you will still keep a stock like this in your portfolio and get excited when most people are starting to...
Or on the watch list.
Or on the watch list, yeah. But keep it there knowing that, hey, price action like this is normal, given where it's come from and what it's done to, in the past. Yeah. That's crucial, because you miss so many opportunities by chasing it on the way down and forgetting about it, and then trying to chase it on the way up and play into that FOMO. So, yeah, that's... If you take anything from today, look at that example just to know.
So you like it too?
Look, I think now's the perfect time to be looking at it, for sure.
All right, now you heard it from the guys, but look, if you haven't grabbed a copy of Dale's book, How to Beat the Managed Funds by 20%, you need this book. This tells you how to select stocks for different portfolios. It's all about stock selection and risk in there. It talks about a growth portfolio. So if you're thinking about setting up one for growth, super, a mid-cap 50, whatever your interest, this one gives you some really good insights into that, as well as so much other great content. And of course, we've got the second book there. Make sure you get a copy of this one as well. It's more along the lines of pattern and recognising that stock markets unfold in patterns over time, which most investors are oblivious to the right concepts when it comes to stock market patterns. Now, TNE, another growth stock opportunity.
Yes.
Like that.
All right, let's have a look. And I mean, this is one in the technology space. We know what is happening with tech out there in the US. Calls for an AI bubble, NVIDIA and Palantir, they're getting smashed at the moment. But when you take away all that hype and you look at what's been happening, well, simple price action tells us, look how strong May was. And we've taken 1, 2, 3, 4, 5, there you go, my counting's good, 5 months, and we've not even clawed back half of May's effort in terms of buyers and sellers. That means something. And so I think right now it's a good spot to be looking at a stock like TNE, because the sellers have rarely given the amount of effort the buyers have. In fact, they're coming into just when the buying really got going. And so I'd be watching this one really closely. It's coming back to that momentum line that Pedro's put there. Yes, it is on an accelerated gradient. So if you were asking, is this one that you put in your super portfolio and hold for the next 30 years? Well, if you're happy to ride the volatility that this will probably bring, given it's at these kinds of elevated levels, my tongue's not working, but then fine. But I think treating it for the opportunity, given where it is today, given it's so accelerated, I think this lends itself more to a short to medium term opportunity. But definitely, if I look at this scenario, it's a pullback to me more so than something more serious today. Now that might change in the future. But
you know, people are bandying about this word crash and saying that when a stock comes back to this sort of degree that it's already in crash mode, but how far would it have to come back for you to say that it's crashing?
I don't think it's the crash that is what, for me, what confirms how far a stock falls is what confirms the crash. It's the dynamic between the buyers and sellers and how it does it. And so a stock may fall 20, 30% initially, like we've seen on TNE, sorry. And when you look at the big picture of things, when you know how to reprice, well, that may not resemble what is being reported out there. I mean, was this a crash, you know? This period through here, which is very similar type in terms of percentage, falls on the way down, was something like, again, and I'll go throughout history and I don't want to go in the teaching mode, but if we, you know, were to apply simple things that are taught in the book and things that we teach in the course, if I was to apply movement like this and say, okay, the stock's gone up, some may consider this a crash and never look at the stock again.
Yeah.
Whereas there are opportunities all the way through if you know what you're looking for. So to me, that's the important thing. It is accelerated a little, so I'd be waiting and treating it more of a bit of a short-term to medium-term opportunity. But yeah, it's got to get through.
So as long as it respects the trend?
For now, yeah.
It's fine.
Yeah, and yeah, get back above that $39, $50, $70 level, that'd be nice.
Okay, next we've got AGL. Now, Pedro, can we have a look at that?
Sure. So AGL, now it's bounced off a critical level here at $8. You can see that we've marked that. That is a very important level for the stock. And I also wanted to highlight that I think a lot of traders and investors get held up on whether a stock is going to go up or down. Right, and they're thinking, well, is that what I need to discover, what I need to know? But when you've got rules in place and when you've got a strategy, it doesn't matter if it goes up or down. You've got an idea, you've got a strategy for both. So basically, don't get too held up on whether, all right, is it going to go down? I'm just going to stay out of it for the moment. I would just make that move.
Yeah, because it makes you second guess, doesn't it?
It does. And you suffer from analysis paralysis at the end of the day if you're thinking, well, where is it going to go? Well, if you've got that strategy and if you've got your money management in place, that doesn't matter because you've got, you know, the scenario for both. But on AGL, I do quite like the way that it's unfolding. I don't think that it's in a long-term downtrend at the moment. I think it's been held up quite nicely. I'm here on the weekly chart at the moment and having a look. You can see that price bounce beautifully off that $8 mark. It is a very critical level from the past there. Now we've got price trading sideways here, and that is looking very interesting. I'm sure you know, people will be looking at that price action right there and thinking, well, that is opportunity at the moment. So this one is definitely not one that you'd be looking to sell. And that's actually the unfortunate part as well, that I see that you know, traders that may have bought up here possibly at around that $11.50 because they thought that possibly that trend could continue. there, and then maybe they would have been holding it all the way down and then only to sell it at the worst possible part. I see that all the time. So the fact that now it's starting to spurt up a bit, we've got volume starting to increase, it is holding up quite nicely. So I would expect a rise to that $10 mark, around that $10 at least, and possibly up to that $11 mark, if I can just highlight there. That's going to be where it's going to meet that heavy resistance. But I would actually think that this is long-term bullish. This is one to hold for the long term.
Okay, AGL, you've heard it now, TLC. A bit of TLC on this stock, Phil?
Yeah, it's an interesting one. We copped a bit of flack when we covered this as a hot stock on a Monday show, I believe.
You didn't do it as TCL by mistake?
No, it was TLC. I remember it well. Can we have a look at that chart? But I mean, we were looking at it back around this period through here, just as it was getting itself ready to move. And again, these kinds of formations we've shown, when you know how to read this type of price action, again, things we do teach, it was expected that we're going to get a run up, a nice little breakout, and we have that now. And so, to answer your question before in terms of what separates a pullback from a crash, well, when you tie it in with the bigger picture of what we're seeing, look how strong the buys have been since that breakout in July, and now the sellers are coming in. But all the while, we're still just coming into where that buying was. So I think it won't be uncommon for this stock, in fact, it'll be favourable if it comes back to this $5.34 level, or even around $5.30, let's call it, and finds a base and goes up. That'll give a lot of confidence that, hey, now we have found and settled on a new high or a new price agreement, because for a very long time, $5.30 was the level where basically sellers said, no way, it's not worth, or it's not getting any higher than that. We've given a bust out. Now is the real test to see whether $5.30 or $5.40 will be the new base for this stock. And we're close to seeing it. So that's why this one is a must watch. I mean,
what sort of growth do you think that you can get from this?
Look, it's a bit of a plotter. It's not a miner or an energy stock that you're going to get wild volatility out of it. And so that might lend well to a superannuation type portfolio. I think it pays a yield as well.
You want to put a gambling stock in a super portfolio?
Yeah, look, the irony of it's good. But it moves quite nicely, and that's the monthly chart, and you'll get clean price action, no gapping. I think, this one's definitely one to put on the radar, not a sell today.
Now, Janine, that might be a small stock, but you know what they say, that dynamite comes in small packages, so you never know. This one could be the dynamite that blows up in long-term growth. Yeah.
Look out, I like it. Well, I've got to ask you, so far, which stock do you like the best?
Do you want to go first? Or?
Yeah, sure. So I actually quite like Metcash.
Metcash.
That first one that we've showed, I like the way that it's unfolding, holding above that trend nicely.
Yep.
And you, Phil?
I'm going to say...
Going against
I'm going to be risky here.
Yeah,
why not?
Alex too.
Why not? Let's have a look at that and just see what happens. Look, if it breaks that, $12, then forget about what I said. But right now, very interesting.
Okay, great, fantastic. Well, that wraps up our first round of stocks. But don't go anywhere, because we have more amazing stocks to come, and in particular, two which could be on the verge of the buy of the year. But now time for our trending topic this week. Phil, take it away.
All right. So recently China and the US entered into somewhat of a trade truce around critical minerals. But is this truly a sign of easing tensions, or does it now place Australia at the centre of a new scramble to secure non-China supply? We'll get into the Australia's impact in a second, but take a look at this article that came out the other day showing China has announced the suspension of its outright export ban on the critical minerals gallium, germanium and antimony to the United States, effective to November 27, 2026. However, exporters will still require licenses under China's dual-use export controls, and shipments to military end users remain restricted. Now, this partial rollback signals Beijing's willingness to ease pressure on global semiconductor supply chains, offering short-term relief to the US and other advanced economies dependent on those niche metals. Now, for Australia, the implications are twofold. It reduces immediate supply risk for local manufacturers, but it also amplifies Australia's strategic value as a Western-aligned supplier of critical minerals. minerals, with the US, Japan and Europe accelerating their diversification away from China, Australia stands to attract greater investment, long-term offtake agreements and new opportunities to develop domestic capacity in gallium, germanium and antimony-related production streams. And the best part here is that one of Australia's players could stand to win big. So, I mean, we're going to get into the chart in a second.
Now, did you say alimony or antimony?
It's one of the critical minerals.
Alimony is pretty critical.
But it's interesting because we've seen this with China and America. You know, they fight and then a truce becomes, you know, evident a few
That was a long fight though, wasn't it?
Yeah, it is. And I mean, as you know, it's starting to evolve now into a bit of a tech war. So
yeah,
it's interesting what's happening. And I think Australia can really become a benefactor in all of this.
Look, I think everybody needs to keep their finger on the pulse of what is going on in this area. So thanks very much, Phil, for updating us on that. We've got a stock now that's really important to look at.
Yes, let's get to the stock, which I think could benefit pretty big. The company's called MTM, Critical Metals. The company's working on recovery technology to extract those critical minerals, gallium, germanium and antimony from e-waste and concentrates. Now, as we mentioned, a lot of the global supply is heavily concentrated in China. So any disruption like we're seeing now, a tighter supply chain makes this company very, very interesting. And what we're seeing with it, I mean, it's not new to the market, this story. Buyers have picked it up and it's seen really, really nice growth. But so, like the other stocks we showed, you know, just before, it is pulling back, which is where it starts to get interesting now. So I think watching this one, again, if we apply one of those momentum lines and follow it through, you'll see that we're now approaching a level where it's time to start watching. Is today the opportune time? No. And again, this is the important part, which we see with a lot of people that come to us. It's when we talk about it all the time, confirmation. Just looking at a stock that's falling is not confirmation. And just drawing a line like we've drawn here is not confirmation. There's so much more that we are using with our eyes that we're not actually drawing or putting on that chart, which is why, you know, please don't get confused with just thinking it's as simple as, oh, yep, it's on the line, I just buy. Because the confirmation part is the most important part. And right now, we're not there.
There could also be another level on the chart that's even stronger. Just below that.
Yeah, that's a confluence of things. This is just one aspect of it, which means it's time to start looking. But overlaying that, you know, confluence and that confirmation, it's not there yet. Doesn't mean you don't watch it, because this could be getting ready to go for a nice run.
Good one. Well, if you want the skills to analyse stocks just like you've seen tonight, visit our website, wealthwithin.com.au. But now let's get back to our topic and get into some more stocks. We've got some really juicy ones, and I can see on that list there are a couple I like as well. Pedro, PME.
Pro Medicus, all right. So this one's one that's been sold off quite heavily, but have a look at the chart. And this is what we always talk about. Look at that bigger picture. Because if you were to come into the market or just come into the news from August 2025, you'll just be seeing doom and gloom on this stock. But then once you really, you know, take that bird's eye look at that bigger picture, and you can see that Pro Medicus has, you know, grown exponentially from basically in 2018, $7.50, I'll just choose a random spot there, $8 just say, to $300 on there. You know, that's to all the crypto traders out there that don't like the stock market. There you go, have a look at this one, because that growth is possible. Now, what's interesting is that now it's coming back to that angle of that trend there, and you know, that's been established since 2024. It did dip below it briefly in April. That was that whole tariff fiasco, and then it, you know, traded back up. Now it's coming back down to that level, and it's actually starting to show signs of a possible reversal. It's a little bit early at the moment, but definitely not something to panic about. And this is what we're talking about. You know, should you sell now? Should you sell all these stocks now? Well, that is not showing me any kind of indication at this moment. Yes, there could have been some possibilities to sell up here, but at the moment, there's nothing really to indicate that. So I'd be looking at that overall trend there to as a kind of an indicator. And it's like what Phil said before, it's a confluence of things. We're not only looking at this, but we're looking at a whole range of factors as to whether this is long-term bearish or just a possible dip.
Yeah, I mean, that's really interesting to see, because if we look at PME, we can see that it's come back to the angle of that line like you mentioned, and we expected the market to pull back in May this year, but it pulled back with the Trump tariffs earlier. We've expected a pullback around about this time or even earlier than now, and it's coming in. So, you know, it's all coming in at the right time for PME by the look of it.
It does, and you know, stocks evolve, and that's where we see these certain patterns that unfold as the stock evolves, and that's where our benefit is in reading a chart, because we can see what stage is it at, and right now it's looking at that like it's in a very interesting stage of its evolution.
Fantastic. All right, Phil, Bank of Queensland's next up.
Yeah, I mean, the banks have had a rough time. You know, Commonwealth, ANZ, they've both reported over the last couple of days been slammed.
The prices have been booming though before that, and then look at the second tier banks.
Well, it proves the point, right? Not even the banks are safe. Everything that goes up will go down at some point, and that is why it's so important, regardless of the news, to be watching this stuff. So going to Bank of Queensland, now this is unlike ANZ and CBA, because it hasn't really taken off near all-time highs. You can see the all-time high is about $18 back in 07. But nevertheless, I mean, if we look at this monthly chart here, it is at an important level, and that is not to discount anything. You know, that 560 level has been so important for this stock. I mean, even if we zoom that up to around $6, you can see how important it's been during 09, during 2012, even during COVID. Around that period it bounced, and now we've seen it in 2023 be the base. So we're close to a level that has seen significant runs from it. And what I'm seeing in terms of the way Bank of Queensland is unfolding right now, this is typical of what you see in a healthy uptrend. Buyer activity, seller activity going higher. And if we apply one of these momentum lines, we're actually getting to the point of where we're going to find a lot of answers. And so if this trend is to stay intact and consider this, you know, bull market, if you will, in play, while we should be seeing buyers come in here. If we don't, then we potentially could get a bit of a deeper pullback down to that $6 level again. But where we are long term, it has proven to be a springboard for buying. So I think, again, this one here right now, it's about, if you're not in it, put it on your watch list and look for opportunities. If you are in it, you need to be watching it very closely in terms of whether or not, you know, this situation is going to change from a pullback to something deeper.
Now, obviously, this is a second-tier bank that hasn't gone on. But look, you're saying that wait for that opportunity because there could be one. Or do you consider Bank of Queensland significantly riskier than, say, a Bendigo Bank?
I look at risk in terms of reward and risk for me. Regardless of what's said out there, you might find a really nice opportunity on Bank of Queensland. You know, let's just say it's $6, that opportunity exists. Well, you may stop yourself from getting into a really good opportunity with a great risk reward just because of something that may or may not be. And so when I look at risk, it's risk based on what the stock is doing today and where it's likely to go.
So don't judge Bank of Queensland by its code, is that what you're saying?
Well, you know, unfortunately we don't work with any inside information, so we've got to use, you know, what we can see. And I think $6 is an important level.
Yep, fantastic.
Just because it's from Queensland doesn't mean it's bad. Right? Okay. Love our Queenslanders.
Thank you for that. All right, Coles we've got now, which has been had been booming, but is pulling back now. Now the commentary is saying go for Woolies instead of Coles.
Well, I don't know about that.
Yeah, exactly. Yeah, it depends who you ask, and it's like what Phil was saying. It's about the setup. You know, it doesn't really matter. You could put any ticker code on here, and basically, if the setup works, then that's what we're looking for. Now, Coles has pulled back to the angle of that trend almost exactly. It is kind of holding up at the moment. It could have a little bit more to go before it finds support. But, you know, if we're going by history, 1, 2, and then that's where it originally set up. So already 3 times it has respected that angle of that trend. So if probability is on your side, then, you know, we're going to find that next bounce around that $21.60 to $21.50 level there. So this one is definitely one to keep on your watch list if you're not in it. If you are, then there were some signs that you could possibly have gotten out up there, but it really depends on the time frame frame of your trading as well, because there's different setups for different time frames. There's setups for a more short term that, yes, you could have got out up there if you're more of a short term trader, if you want a little bit more income. But if you are holding for the long term, you could choose some rules maybe on the monthly chart that could have kept you in and could still be keeping you in. So you could do that, and that's the beauty. That's what we teach from the get-go as well on the course. There's different portfolios for different situations. You've got your super portfolio, you've got your growth portfolio, you've got your short-term portfolio. So you're going to be using different setups and different strategies for each. And right now I can see multiple different ways that you could actually trade or just invest in calls. You know, here on the monthly chart, you could just basically put a long-term trend, roughly, I'm just, applying it roughly there, and it's just following that momentum quite nicely. So you'd just be in it, you'd just be collecting the dividends along the way, plus getting the growth, beautiful. But if you're a short-term trader, there's also possibilities here, and the next setup could be right around the corner.
So a nice income and growth opportunity. Now, ResMed is the next one. This is a favourite in the market, a darling of the healthcare sector. Phil.
So it should be. I mean, every other healthcare stock is getting destroyed. So let's go and have a look at ResMed, because it's really bucking the trend. And right now with ResMed, I'll bring up the weekly chart because Pedro's been nice enough to keep drawing these momentum lines. Again, there is a theme tonight. That is what is happening. We're seeing really nice moves back towards the long-term momentum. And, we did a show back around the tariff time, I remember, when the world was saying the market was going to crash, and we were basically saying the opposite, saying, well, hang on a second, it's at a level where we could really see a bounce. And if we go back to that chart of ResMed, there is tariff season. And so, again, an effective tool like this can really help you separate the noise from what can happen. And for me, ResMed right now, I think the way it's pulling back, this is the crucial level where we're at. Through here, and I mean, even if we were trying to get fancy with it, maybe even somewhere down through here. But as long as it holds 38 to 36.10, bounces and reverses, I think that's quite healthy, because that'll be doing it as well after breaking through to a new all-time high. And that's important.
Now, we know that some stocks tend to be more volatile on the downside. Do you think this one is one of those type of stocks? It's about identifying the type of stock that's right for a particular person's portfolio. How do investors look at it?
Yeah, I mean, the bigger the stock, then I guess the volatility is lessens, if you will. If you're looking at a top 20 stock, top 50, and then sector specific also, if you're trying to get involved with the miners or the energy stocks, they are more volatile than, your consumer discretionary or something like that. But I think you've also got to, be reasonable to the fact that sometimes if it is an event-driven type scenario like COVID, well, there might be nothing you can do about it. It might be sharp and short. If there is a fundamental breakdown in the economy like we saw in 2008, well, that tends to roll over a bit slower. And those crashes, 1929, 08, they took years to unfold. Didn't happen in a week or a day, which is what a lot of people think. How am I going to get out? Well, you've had plenty of warning signs in most crashes. COVID, tariffs, yeah, bit shorter. But when you're looking at these kinds of stocks, I think big stocks, and when they roll over, I mean, this has hardly rolled over, to be fair. It's always found appreciation. So you will find it, what are we on here? The weekly chart. You will see throughout this period, they happen short and sharp. And so that's something to bear in mind. When they happen for an extended amount of time, and this answers your question before, when do you know it's a pullback or a reversal? And so again, I don't want to dive into it too much, because then I'll start giving away too much. But the point is, right now, this is more likely an
orderly pullback.
An orderly pullback, yeah.
Okay, beautiful. You summed that up perfectly. QBE, let's have a look at an insurance stock, something different.
Insurance, yeah. We've got a nice mix here today for everyone, and this is another one that's pulled back a little bit, but it's been on a beautiful run in the last couple of years. So let's get onto the chart. So
yeah, they don't really want to drop the prices for people, do they, the insurers, after making all this money?
Everybody hates insurance companies, don't they? But if you can make some money out of them,
well, they say,
pay for your insurance, don't you?
If you can't beat them, join them, right?
I called them a 6-letter word on yesterday's show, and I probably shouldn't repeat it.
No, I don't think so.
No, because it starts with ASS.
Yeah, I'd rather just let's look at the chart for now, and maybe we'll evade that one for now. But I totally agree with you, Phil. Now let's have a look. This angle of the trend here that I've marked is the one that we're looking for the stock to come back to. It's around that $18.50, and it also does coincide with that, that previous support and resistance there. So that's the confluence point there. It is looking like it's reversing a little bit now on the monthly. We're just in November anyway, but it is looking quite nice here for the month of November so far.
There was a threat of an interest rate on hold or possibly drop. QBE's been coming back. What if interest rates go the other way?
If they go up, well, there is some commentary that's quite a possibility now with the inflation coming back on. So I think if inflation does come back up and we do see interest rates rise, that's actually going to be positive for QBE, because insurers, they put a lot of their investments into cash, so into like bonds and things like that. So obviously if the interest rate is higher, they're going to benefit from that as well. So
keep an eye on that.
Definitely. If interest rates go up, hopefully they don't, because insurers are probably going to be the only ones that are going to be benefiting from that. Everybody else won't be, including the consumer.
But then, prior to the GFC, the interest rates were going up, and then government came in and did tax cuts, and I've noticed Trump talking about that $2,000 benefit. He's saying it could be a tax cut that's delivered. It's perfect timing. It happens every cycle. So, when I look at those things, I just sort of smile and say, yep, it's happening all over again, but just a different story right at the top of it. So look, we've looked at some really good stocks, and you're back there with me. We've looked at some really good stocks there for you. Which one did you pick? I want to hear what you guys said.
I am going with, if we have a good look, and I'm sorry, I'm doing a bit of a Janine here, going through the list. I'm going to say QBE.
QBE
looks interesting.
You like the trend?
Yeah.
I do like QBE as well, and I also like Bank of Queensland. So and they're going to negate. So if interest rates fall, Bank of Queensland will do good. If interest rates rise, QBE will do good.
Moving on, shortly we're going to get into some massive news that came out today about one of Australia's biggest oil players. But first, let's answer your questions. Shay writes, there was plenty of excitement around DVP recently, but it's since pulled back alongside the broader metals market. I was hoping to get an entry around 471, but it's gone the other way and looks a bit soft in the short term. What's the team thinking at this point? Phil.
All right. Yep. Let's go and take a look at the chart of DVP. Now, I like the stock pick. I think, it's when you look on the big picture monthly time frame, it's starting since 2021, it's really nice, the breakout. It's held from the breakout, which is quite exciting. So I think we're still, if we were to paint where we're at in terms of the big picture of things, it's still in that bullish move. This pullback is not uncommon, breakout, pullback, and now I think it's important when this pullback stops. It looks like we're starting to see buyers come through. You can see the low in November being 312, and we're already clawing that back. So I think if we get some more bullishness, finish the month near the high, then it could be a good place to start looking at this stock, especially if it can hold above this level through here.
Now, it's a really interesting stock choice, Shay. Keep on it, continue to watch it, and just say, well, okay, it didn't work out this time. It didn't trigger the entry. You haven't lost anything. You just wait for the better opportunity, I would say. Now, Noel's email is next. I saw a comment online about VIT a while ago saying that it was trading profitably and was active in terms of accumulating and merging with other players. I bought in at around 30 cents and have lost a fair amount. What should I do? Now, this is a common scenario that we see when people are sitting on a stock, it's gone the other way, and they're still holding it, they've got no exit strategy. What advice can you give at this point?
Yeah, emotional roller coaster ride at this point.
Get educated first.
Oh, for sure. That would be the answer. But I'm just, trying to lay out what he would be going through, because we've been there before. You buy something on hope. I mean, this is before you know what you're doing, and only for that capital to fall, and then suddenly you don't want to lose, and then you're just holding onto it. It becomes a long-term investment. But if you know what you're doing, and if you cut your losses, that's going to save you a lot of heartache. You have to basically shut your eyes and trade it mechanically, not emotionally.
So will it recover?
Well, at this stage, it's not showing any signs that it's going to do that. If we go to the weekly chart here, it's interesting that Noah's looking at the fundamentals and that they're profitable and that they're...
Doesn't always mean it's going to go up.
But it doesn't always mean it's going to go up, exactly. You know, look at the charts, because the charts will tell you when to buy. The fundamentals will, you know, sometimes will tell you what to buy if the story is good. But at the end of the day, it's a chart that's going to tell you. And right now, there's nothing here that's really getting me excited, unfortunately, no. And, you know, you're in a bit of a predicament because you're already down a fair amount. And if you sell at this point, only for the stock to then take off on you on some type of news, because these types of stocks, that's the way that they move. They move on news.
Yeah. Now,
but how long do you hold for? What if it doesn't?
They don't want to start the course, or they want to delay or put off starting the course because they don't have the time or the money. But isn't it amazing how people with a bigger need somehow find the time or the money? Or we have services that allow people to get in now and pay later. So what's the real reason, do you think?
Well, I can't tell you how many people have actually signed up because of, you know, watching the show and doing this kind of stuff as well. It's like, you know, if you can...
Giving them a big leg up, really.
Yeah, and if you can get yourself in the market, in education with using the market's money, then I think take it. You'd be crazy not to, because you're going to get educated, you're going to learn how to do it the right way.
Rather than give it away on little stocks like this that...
Correct.
And not the timing wasn't right.
Yeah.
Yeah, that's right. And you avoid getting into these in the first place. You know, start with the major players first. Play in that field. Don't play in something that is geared against you. You know, these are harder stocks to trade, even for a professional. So start with the bigger type of stocks and definitely get educated. That would be my advice.
Yep, that's really good advice. Now, Lewis is next and writes, I've been looking to get into AI stocks like brain chip holdings, but I'm a bit unsure with all the talk about a supposed AI bubble. I'm not looking to short anything, but I do want to get ahead of the news. Wouldn't that be lovely? In this kind of situation, is it better to stick to the price action or focus on the fundamentals? Should I stay away from these stocks altogether and wait for the bubble to burst? First of all, fundamentals or technicals? I mean, do we use both on these types of stocks or just one?
His question was, how do I want to get ahead of the news?
Yeah, that's big part of it.
Well, over the last 20 years, the way you get over the news, looking at, you know, the markets, to me, I've always seen price action go up and then question, okay, price is moving up, I wonder why that is, only for then a few weeks or a few months later for that news that you're wanting to get in front of eventually coming out.
So I think that answers the question.
I try to keep it as simple as possible. So yeah, you know.
I think a lot of people try to eke every single profit out of the stock as well. They want to get in before the initial move, but it's that initial move that you need to know and then capture the rest. You know, the easiest money is in the middle of that move.
So what you're saying, even after the news has come out, sometimes there's an opportunity after that.
Exactly. Wait for it to happen. You know, wait for everybody else to take the risk, and then you take that lower risk trade. If you're taking that initial risk, you're that first respondent, you might get burned most of the time, you know.
Yep.
So
good analogy there. Now we now have Jonathan's email. What are your thoughts on HDN and RFF? Really short and sweet. You know, I love those sort of emails, but a bit more information would be fantastic. HDN's the first one in the list. How about
I think we can only do one per stock, so we'll pick HDN and have a look for you. But yeah, I like it. I mean, what do I think? It's coming out of a nice base, and you know, really the all-time low in October 2023, nice bounce and rose up. I mean, we didn't see that erratic seller activity. In fact, this was a crucial level for the stock. It failed so many times to get above 129. We've done that now. We've come back and tested it, and we've broken out. So I think what we're seeing is quite positive, especially for the month of November, given how November has been for most stocks. This is actually up. So in trend, I like it. I think the next level of area that you probably need to be cautious of is where it is right now, and that's why it's probably pulling back. But once it gets through there, you're potentially looking at a run up to this level through here. So quite nice stock, clean, doesn't really have too much in terms of gapping or wild price action. So pretty easy to trade as well, and you're kind of going to get that from a REIT. So I don't like. I don't mind it. Sorry, I don't like it.
If you don't like it, I'll take it.
No.
Nice.
Good stock choice, potentially at some resistance level, but reasonable upside after that.
Yeah. In trend looks nice.
All right, fantastic. Jeremy's question is next. Absolutely love watching your show. Thank you very much, Jeremy. AI stocks are very interesting, as is renewables, and I would love to hear your thoughts on I think he means lithium, is that?
No, the stock's code Lithium. Yes.
Oh, right, okay. Let's take a look at that, shall we?
Yeah.
Microcap stock.
Well, looks like a bit of a bum
controversial now.
fossil there. It's quite an illiquid stock at the moment. I'm not sure if this is something. I'd love to know his level of competency in trading, because this is quite illiquid. But we do see volume coming into it. But have a look at the way that the chart actually is showing, on this high volume. It's actually getting sold off on that high volume. It's not really moving up. If I saw that close up above this area here, then I'd be more bullish on it. But the fact that it got sold off quite heavily and then really failed to get above that, what is it, 1 cent? Basically even 2
almost
cents.
2 cents here.
Almost 2 cents. It is quite an illiquid stock. Very early days. There's still a lot. If this does move, there's still a lot that you can capture. At the moment, I think it's way too early.
Now, on our show, we've talked about microcap stocks from the conference. And if you haven't seen that, you need to check out the shows that we've done previously on microcaps. But this particular one is really illiquid. I mean, we talked about just looking at the monthly chart as a way to trade some of these. Would that be a strategy for this one?
It could be. If we go to the monthly chart, we can see that it does iron out some of those moves a little bit, and it does look like more of a liquid stock. But even then, if you were to be looking at this from April 2025, it's really done nothing. It's held around that 1 cent. I would be looking for indication though on the monthly chart. So you could put a horizontal line above that level there, so around that 1 cent. Possibly even 2 cents if you wanted to round it off. And you could trade this on the monthly, yeah, for sure. That would probably be the best way to be trading this at the moment. And we can have a look at the indication in the past, whether that's been the case. And we have a similar scenario back here in September 2014, where we saw price come up and then be, holding up and then take off. So definitely monthly would be the way to go.
Fantastic. Well, thank you very much for all of your emails. We look forward to seeing lots more of them now. It's time for our hot stock tip for the week. Pedro, shall I do a drum roll on this one? Is this going to beat Phil's previous ones?
Nah, not possible.
Not possible?
Let's see what happens.
the goods.
You're going to have to tune in. So
This is what everybody waits for.
All right, so the hot stock for today is Ampol Limited. Now, before we get into the chart, let's take a look at the news that came out today. So third quarter earnings were stronger than the first half and well ahead of last year, with Australian convenience retail leading the way and New Zealand improving. The Lytton refinery is back in profit, and as global refiner margins surge, hitting almost US $14 a barrel in October. So overall, Ampol says the business is performing well and building a more stable, retail-driven earnings base for the years ahead. So now let's get into the chart and see what's going on with the technicals. Now, I'll start with the weekly chart here because I'm more excited about the weekly chart at the moment. The bigger picture, the stock has been trending down since April 2014, but we can see that now it has broken above trend quite nicely and decisively. Now, price then traveled sideways around May to July, and we can see that here. I'll just put a horizontal line to mark that. And now we're witnessing something very similar where we're seeing price trade sideways. So if the past is any indication of what's going to happen here on the right hand side of the chart, then we could possibly see a price take off. Now, I'll measure that move there. We've got 16% from that top there. So if we were to extrapolate that out from that previous high there and extrapolate maybe another 16%, then that would be roughly around that $38 mark where we can place a price target. I would say that would be my first price target there, around that $38, which represents roughly around that 20%. I would say 20% upside from that sideways consolidation. So this one is looking quite nice. And now I would add in that oil is going through something at the moment, especially with the Russia-Ukraine war, where Ukraine's targeting more and more Russian oil infrastructure, and of course you've got that fleet that isn't really in international eyes at the moment, that's coming out of Russia, that's been targeted as well. So we're looking at a substantial amount of oil coming offline from Russia, possibly in the next year or so. So if that triggers a bit of a hike in oil prices, then Ampol will be one to benefit. And unfortunately, sometimes you see something like that happen, and I have a look at the price of spot oil, right? And it might not have gone up very much, but you see the price at the pump has gone up dramatically. So I think sometimes they play on these things a little bit,
as soon as they get a sniff that it's going up,
that it's going up. Exactly, and I always think, and that's the benefit of being a chartist. You think, well, that the price hasn't gone up, but it's gone up about 10 to 20% at the pump. So that's something to take into consideration. And again, if you can't beat them, join them.
So stop focusing on the pump price and focus on making the money out of it on the chart.
On the chart, exactly right. Good dividends as well, pays.
All right. Well, Phil, did you have a comment?
Yeah, I mean, I second everything Pedro said. I like it. I like the fact that it's bounced right now. What would be nice, and we're seeing some more volume pick up, but over the last couple of weeks it's slowed down. I just like to see volume get involved a little bit more. But yeah, I think it's nice, bullish, broken out, huge level at $20 that it's bounced off. I just think if you're looking for a long-term opportunity, I'd be planning for the worst, not the best. And for me, this is the level at 35.60. If it can break 35.60 convincingly, then I'd be considering this more for a long-term proposition. History has proven that it can't.
Yeah.
So that would be the limit to where I would be expecting upside.
Well, we were talking before about the fundamentals, and the news came out. Wouldn't you expect, if it was really good and the market liked it, that the price would have gone up, but it hasn't gone anywhere? So doesn't that then make you think, well, that wasn't the news that was going to push the price up, obviously, so let's just sort of back off on this one for now?
I don't try to get too, predictive because then you put yourself in the point of view to...
Judging it.
To assume, to say, why should my analysis... Maybe your analysis is right, but what makes you think that your analysis is going to be right at the time that you think? Because if that's the way the market worked, then, if common perception was it should move right now when it does, we know that's not exactly how it works. So I wouldn't focus too much attention to that, because you might find in a couple of weeks it does. So as long as you're following and tying up your risk on the trade, on the opportunity, which right now it looks like it's getting ready to go for another run. So.
Yep.
Yeah.
Right. Fantastic. Well, if you want more from us, check out our video, Time to Sell the ASX and Buy the Dip on Gold.